I'm so happy that Katie could join us today. I'm guessing most of you know who she is, but in case you do not, founder and CEO of Haun Ventures, one of crypto's largest investment firms with at least $1.5 billion under management and reportedly a little bit more in the works. We'll see if she wants to talk about that. Before becoming a venture capitalist, Katie spent more than a decade as a federal prosecutor where she created the government's first cryptocurrency task force and led investigations into major crypto crimes, including the Mt. Gox hack and corrupt agents in the Silk Road case, which I remember you telling me about this. It is like a made-for-TV movie. If you don't know about it, you have to research it at some point, but we won't get into it today. Anyway, she was the first female partner at Andreessen Horowitz, and she co-led their crypto funds, served on Coinbase's board as well from 2017 until last year, helping guide the company through its public listing as the first major crypto exchange to go public. Thank you again for joining us. It's great to see you.
Thanks, Connie. Thanks for having me here. This is on?
It is. So I was telling Katie the last time she came to a StrictlyVC event very generously during COVID, I had a bad microphone, so we had to hand things back and forth, and I was really afraid we were going to have a repeat of that today.
I didn't remember that. I remember we had a great conversation. So, yeah.
Oh, well, that's great. But I saw you more recently at a Disrupt event, and that was really during the height of the crypto winter. This was fall of 2023, so less than a year after FTX had imploded, but everything was still, very depressed. People were like, oh good, crypto came and went. And you, of course, had just raised this fund, or you had raised it, I guess, maybe in 2022. And you were telling me a little bit about really wanting to lean in to crypto and this sort of harpoon strategy that you had, which was finding distressed assets and sort of taking advantage of the market conditions. So I wondered if you could tell me a little bit about, I guess, again, how you had the confidence to invest in those companies and also how that strategy is playing out a couple of years ago.
I remember you asked me, and it was in a room bigger than this because it was at TechCrunch Disrupt, right? And I told you it was a good time to invest in crypto. And I think many people in the audience were very skeptical. And I think now that asset class has more than doubled since that time. But we still think it's really early days. And I'll tell you, even just taking the kind of classic example of Bitcoin, why I think it's really early days is this is, I thought, a really interesting statistic. In most other asset classes, assets are owned about 80% by institutions, 20% by retail. And actually, in the case of crypto, and particularly with Bitcoin, it's actually 10% of institutions hold the world's Bitcoin right now, and 90% is held by retail. And we think we're very early in the story of institutional adoption. And when you asked me about the harpoon strategy relative to the companies, and I think we talked about, we announced Chainalysis and Fireblocks and some of those at that time. If you think about Fireblocks, obviously, they have a specific revenue and pricing model, but a company like Fireblocks that at bottom is a custody company, and they have many other products and services, but that company becomes more valuable as crypto asset market cap rises. So I think we're cautiously optimistic, but it is crypto. It's very cyclical, and I think we're not traders. We're not trading in enough positions, so we feel very good about the fund and about our portfolio over a 7 to 10 year horizon. But we're also prepared for massive corrections along the way. And one thing I've always said is crypto is a market and it's also a technology. And most people fairly only focus on the market story. They're focused on the price. And I think, I'm not counting you in this, Connie, but I think most mainstream media outlets also really just focus on the price. What's the price of Bitcoin? What's ETH? What's Solana? They're missing that technological story. And we've been watching that closely, and we're very excited about that too.
Well, as I was telling you, honestly, I need to be educated here, and I ask for your forgiveness for those of you who are very crypto savvy, because I do sort of have a lot to catch up on, and I'm eager to do that. Your contrarian approach during the downtime seems to have paid off. That includes infrastructure plays that survive the winter. I wanted to talk to you a little bit about stablecoin investments, because it's such a big story right now, and candidly, I'm still trying to understand them. Your newest investment, I think just yesterday was announced, maybe, XFX in Mexico City, is
right. Yep.
is building cross-border settlement infrastructure. You led their $9.1 million seed round. just help me understand the value proposition there.
Yeah. Well, I think we've made a number of stablecoin bets. We were investors, I think, as you know, Connie, in Bridge, which was acquired by Stripe, and we've made a number of other stablecoin investments actually out of our early stage fund. And I think just zooming out, if we think about stablecoins and the value prop, I think people who looked at stablecoins a few years ago thought, what is the value prop? I mean, you've asked me this before. You've said, why do I need stablecoins? And I said, I refer to this as, if it works for me, it works for everyone problem. We have Venmo, we have bank accounts. I don't know how many international remittances you're sending a day or a week. Probably not that many. So your system works fine for you. But I always pointed out with Turkey, Tether right now, USDT, which is a stable coin. People in Turkey don't think of Tether as a cryptocurrency. They think of Tether as money. And there are plenty of other countries where that's the case. They need stable value. So we have access to dollars and a stable dollar. Although I think inflation now is waking people up to just how the dollar is losing. We'll talk about that a little bit, how the dollar can lose value. We'll talk about that relative to Bitcoin. But back to stable coins, I think it's merely that if you looked at it a few years ago, it didn't make a ton of sense for consumers in the US to use stable coins because it was still a bit janky, the infrastructure wasn't quite there, and it was still maybe $12 instead of $44 to send an international wire with a stable coin on average. But 2 years later, fast forward, and it's sub 1 cent, and it's instant. And it's fully now, if you are using, for example, USDC, which is Circle's stable coin, it's fully backed 1-to-1 for $1 in a JP Morgan bank account everywhere. And I think you can send this around instantly, globally, frictionlessly. And that's really different from 2 years ago even. And that's why now today for stablecoins, you see that you have $250 billion of stablecoin supply, which is remarkable because stablecoins in 2015 weren't even around. And now, by the way, stablecoins are the 14th largest holder of U.S. Treasuries in the world. They just surpassed Germany and Norway. And stablecoin transaction volume actually exceeded Visa's for the first time this year. So I think that's, again, very extraordinary. And people weren't paying attention over the last few years. They thought crypto's dead, blockchains aren't good for anything. And we think stablecoins have found clear product market fit. We're still really early in the stablecoin journey, though. It's like 0.2% of global payments use stablecoins. So very, very early. But you see companies like Stripe paying 100 times forward revenue for businesses like Bridge. And I think there's a reason for that. And it's not just that. I think we see a number of other players like Visa, which invested in another one of our investments, BVNK, which was a competitor to Bridge. And now we're able to make an investment in BVNK, and Visa has now invested in them.
And that's in Europe.
Correct, but they're global.
Okay. So I think, again, to somebody who's not following this as closely as she should be, but my impression still is that it's like a hassle. You have to have a crypto wallet. You have to manage private keys. Also, the insurability of these investments, I think, scares people. You mentioned Circle guarantees everything, but there are a lot of stablecoins where that's not the case.
Right. So when we talk about stablecoins, we have to really distinguish between talking about something that's more like a Wild West experimental version, like algorithmic stablecoins, and that's not what I'm talking about right now. I'm talking about fiat-backed. It's really just a digital dollar that's programmable. And by the way, that programmability is also really important, and I think is a feature, not a bug, for consumers. I shouldn't only focus on the consumer use case, though, because the reality is you now have companies, enterprises like SpaceX, like Scale AI, that now are using stable coins. And you just saw Walmart and Amazon and a couple others announce plans for stable coins. They're exploring stable coins last week. And a couple other large tech companies that I can't divulge today here that I can tell you are going to be accepting stable coins. So this is happening, and it's not just happening for consumers in Turkey, but they do want access to dollars. And you mentioned insurability and private keys. I think you're really thinking, when you think about private keys, Connie, of Bitcoin, early days. But there are consumer products. It's much more Web 2 experience where it's one click, it's QR codes. the user experience has changed dramatically, again, in the last 2 years. It's not just architectural improvements, but it's also user experience. So if you haven't checked out USDC, go experiment and see how hard it is to pay. I think you'll find it's actually quite easy. And you mentioned insurability. You know, Circle's now a public company. It's not just Coinbase. And it's audited by a Big Four accounting firm. And you said, what about insurability? Well, I would say if you have balances north of, and I know most people don't, but if you have balances north of $250,000, those are not FDIC insured. It's fractional reserve. We saw this with Silicon Valley Bank. A USDC, one USDC is fully reserved. So it's not fractional reserve banking. So we could talk about insurability also of regular bank deposits.
Sure. Well, I think that was a real wake-up call when Silicon Valley Bank went under. Everyone was like, oh. So these regional infrastructure plays, you know, mentioning BVNK in Europe, your investment yesterday, suggest a pretty global strategy. And I wanted to ask you, that's pretty different from your A16Z days. At least at the time, the firm was very focused on Silicon Valley and, you know, specifically, and I think only had an office there. I wanted to ask, I feel like I don't see you do deals with them. And I wondered if you are, you know, if there's like a gentleman's agreement that you don't compete or that you do collaborate with them, and I've just
It's not a
missed it.
gentleman's agreement. But no such agreement. In fact, I still talk to Andreessen Horowitz. You're right that we haven't really done any deals together of late. I'm sure they are deploying, though. I told you, Connie, so it won't surprise you, we deployed quite heavily into Bitcoin, into Ethereum, into Solana during the what you were calling crypto winter, and I'm sure they did as well. I don't know. So you might see us not run into each other on deals that are announced traditional venture announcing in TechCrunch, for example, but I'm sure we share some investments with them. So that's the first thing. You say, you know, we weren't doing global deals. I actually don't think that's the case. I think we're doing, you know, we want to back the best founders and the best projects and the best tech. And it turns out a lot of that is right here in Silicon Valley. We still believe that, but there's also a lot of it all over the place. Funny enough, though, some of our early stage founders, I was joking today, and I wasn't really joking, it's actually serious. One of them is overseas. And you know, the regulatory stuff, there's a lot of questions around regulatory stuff. And so we did see some founders choose to build, for example, in London or in Abu Dhabi or in Singapore. And a couple of folks now have reached out about they want to come back here. And they know engineering talent is really rich here. They want to come back. They want to be here. I think also the resurgence of kind of AI, and we can talk about this a little bit, the synergies that exist between blockchains and AI. And I do want to talk about that because I do think they're very synergistic technologies. Some of these founders know that's all happening out here. So I would say the majority of our portfolio is probably founders out here, but we are very global. We do have investments globally, and so does Andreessen Horowitz.
Well, also, I'm sure now that sort of, you know, the regulation here is becoming sort of clearer or coming to fruition. I'm sure that's driving a lot of interest in being here that didn't exist before. I also just wanted to ask, Mark has been a frequent visitor to Mar-a-Lago. David Sachs is our new crypto czar. Does that put firms that maybe don't have the president's ear at a disadvantage?
I don't think so. By the way, it's not just the president who's making crypto policy, right? We saw that. Clearly very important branch of government there, the executive branch. But remember, we have 3 branches of government. By the way, I saw David yesterday night. Yeah. And I think, look, and I think I'm glad David Sachs is the crypto and AI czar. I'm glad that he's a subject matter expert. But I think if you just think about the president, you're really ignoring Article 3, an entire branch of government, which is the courts. And the courts were the only thing that was saving crypto, let's call it regulation, it's not really regulation, in this country over the last 4 years. And the reason why is because the courts, in particular the DC circuit, are the reasons that ETFs in this country were approved for Bitcoin and for Ethereum. And you might think, wait, I thought it was the SEC that approves that. It was, but the DC circuit left them no choice because, of course, the DC circuit, one court below the U.S. Supreme Court, not to bore you, because, you know, I used to be a con law person back in my old days.
I'm not in.
The DC circuit, they issued a unanimous opinion The most liberal judge on the DC circuit joined the most conservative judge on the DC circuit and a moderate in between, and they unanimously wrote that the SEC had acted arbitrarily and capriciously with respect to digital assets. And that left the SEC no choice but to go approve ETFs, which I think was a really important signal for the asset class and a really important case. And it wasn't just the DC circuit. It was the Second Circuit. It was the Third Circuit. It was the Fifth Circuit. Now I'm getting into the con law nerd days, so I don't expect you to know what that is, but these are federal courts across the country. And I think that was pretty important for crypto policy. And I think also we saw yesterday, the other branch of government's pretty important for crypto policy. That's not the president and not the executive branch, is the other branch of government is Congress. And yesterday we saw bipartisan, we saw Democrats vote, and we saw Republicans vote in favor of the Genius Act, the stablecoin bill. We're hopeful there will be another bipartisan vote on the crypto market structure bill. And I think that has nothing to do with, obviously the president has to sign it into law. I think he signaled that he would if it comes to his desk. Apparently he just tweeted, send it to his desk ASAP with no delays and no add-ons. Sent that to me. So I think it's just too myopic to only focus on who the president is right now, even though, of course, that provided tailwinds for the industry. I'm not denying that. But let's not lose sight of all of the other things in government that matter. And do we have their ear? I think, look, what you need to have is you need to have credibility in the space. And I think that's really important, and that's something my firm, I think, has, and we want to keep.
Yeah, well, I wanted to ask you what you thought of the Genius Act. Sounds like you're very excited. Is there anything that you don't like about it?
No one asked me that question yet, so thank you. I guess I don't know how I feel about its prohibition on yield-bearing stablecoins. I'm not sure that yield-bearing stablecoins are a good idea for consumers in the U.S., but I'm not sure that a prohibition is a good idea. So I'd need to think more about that, but that's the thing that comes to mind. For example, in Abu Dhabi, they allow a yield-bearing stablecoin. And if you think about it, who gets the yield? If you had a savings account or checking account and you're getting yield on that, or you're getting interest, what if you just said, no, the bank gets the interest, not you, and they're lending out your money, right? So I kind of think you should get the interest. And here, with a prohibition on yield-bearing, what happens is it goes to Circle and Coinbase. And I love Circle and Coinbase, but I'm not sure I love the flat prohibition. On the other hand, I think no piece of legislation is perfect, and we are supportive of the Genius Act. We're glad it passed, it passed out of the Senate. And I'm really glad it passed in a bipartisan manner. I think that's really important that Democrats and Republicans came together to pass something.
Yeah, I think that's really interesting. I think something like 14 Democrats came over and just 2 Republicans voted against it. Do you think it's strong enough to keep terrorists and drug traffickers from using stablecoins for illicit means? That's been something that some of the people pushing back against it have said.
Who has said that?
Well, the ranking member of the Senate Banking Committee, Elizabeth Warren, hates it, as you're, I'm sure, very well aware.
Yeah. I totally disagree with that. And I know it might seem like obvious that I disagree with that because now I run a crypto fund, except let me tell you, I spent a lot longer, 12 years as a federal prosecutor, prosecuting the largest money laundering crimes that had ever been brought in the Justice Department at that time. And murderers and gang members and terrorist cases. I started my career at the National Security Division, in fact, in Washington, D.C. So I care deeply about anti-terrorism matters. I, again, voted with my feet and spent 12 years in the Justice Department fighting it, and criminals. And I can tell you from that, criminals are great beta testers of all technologies. They are going to find loopholes in any system. And frankly, I think stable coins, what I used to say, I was asked to shut down Bitcoin, right, as one of my assignments, which I was keen to do before learning about it at all. And thankfully, I did learn about it. And what I learned about it is this technology is highly traceable, way more than cash. The largest criminal instrument, $100 bill. Everyone knows that. And bank wires, we have this fallacy that we think they're so traceable. By the time you subpoena a bank, if it's in this country, you might get a reply in 6 months. But more often than not, it's not in this country. So you might get a letter rogatory process. Let me tell you, that takes about 2 years, best case scenario. By the time you get those returns back, the money's moved. So that system was created before our banking system went global and went digital. And the money has moved not just once, but 12 other places. So seizing and tracing criminal proceeds by bank wires, I'm not going to say it's impossible, but it's really darn hard. And only a fraction of cases, only a fraction get prosecuted. In fact, Treasury Department testified that 99.9% of money laundering crimes succeed with traditional bank wires. So give me traceable something with digital breadcrumbs any day of the week if you put on my former prosecutor hat. So yeah, sure, stable coins could be used for criminal activity. Cash can be used for criminal activity. The internet is used for criminal activity every day. And yet I think there are a lot more benefits.
I also just wanted to ask, speaking of Elizabeth Warren, she has called it a superhighway for Donald Trump's corruption, pointing to the Trump family's own stablecoin and the potential of financial benefits they'll gain. There is language in the Genius Act that keeps members of Congress and the senior executive branch from issuing a stablecoin product, but there's nothing about family members. And so I wanted to ask you, you are a crypto investor, but you are a former prosecutor. I guess what you think of that, how important it is to you that policymakers, I guess, not have financial stakes in the outcomes of regulations they're creating.
I can tell you I was probably the first person in this room who bought Bitcoin undercover for the federal government, not for myself. And there were no prohibitions on it. But I thought that I shouldn't be doing it because back then Bitcoin was really early. There was no prohibition on it. And looking back, I'm not sure it was wrong, but I think there were a lot more market movements, right? If there were early actions, you could move the price. I remember when the Silk Road case happened. I think that had an impact on. So if you're going to be, about an indictment, you have unfair, asymmetric information, right? So I just didn't think that was a good idea. Unfortunately, because I would have made a lot of gain on it. So I think not all policies are written. There was no law against it, Elizabeth Warren. There was no law that said I couldn't. I just didn't. Now, in terms of laws, I think it's really ironic that she, not to get political, because I'm not going to be political, but I'll tell you, I do think it's ironic that Elizabeth Warren or other Democrats who do call this kind of corruption are not running to pass crypto legislation like the market structure bill, because had that legislation been in place, by the way, 70 House Democrats voted for these bills last year before the election. And had there been rules of the road in place, I'm not sure that some of the coins that the president's doing, I'm not, by the way, offering here a legal opinion on whether they're okay or not. I certainly didn't invest in it and I didn't study it. So I don't know about the legality, but what I can tell you is that the regulatory framework, there would have been a framework. There would have been clear rules of the road for what's a security, what's a commodity, and what are the consumer protections around that. And I think that's exactly what the industry needs. So I don't understand the opposition. And I think 70 House Democrats have voted in favor of these bills. I don't understand the opposition to it.
Well,
you just made me get a little political, but it's in a bipartisan way, I think, because it's more about let's have some rules.
I'm going to make the most awkward transition ever, only because we're out of time. So
we talked about law and policy. I know. 50% of this.
I have a million questions about tokenization and other things.
Oh yeah, tokenization. By the way, I'm glad you said that because I was debating Paul Krugman on stablecoins in 2018, and you can go watch it on YouTube. And I said stablecoins, solve for the volatility, and he, of course, Paul Krugman dismissed that. He also dismissed that Bitcoin would ever find product market fit as a store of value. And I think it was around $4,000 at the time. And now it's a multi-trillion-dollar asset class. He wrote off stablecoins too. But what I also would say now, if I were kind of debating him again, is tokenization of real-world assets is also around the corner. And the reason for that is if you think about stablecoins, it's just a digital representation of a physical asset, of a dollar. And so all of a sudden you start wondering what other financial assets are there that we can tokenize digitally. And they're money market funds. And BlackRock's already done this. This isn't like my brainchild. It's like BlackRock, Franklin Templeton, they've already tokenized their money market funds. That's already happened. Equities, private credit funds, you can start to imagine you can tokenize all kinds of things, and you really have market expansion. You have 24/7 access globally, so anyone with a smartphone around the world could participate in this, and that unlocks kind of new markets in a way like Netflix unlocked new markets for content. You used to have to sit there on a Thursday night and watch Seinfeld. For those of you who remember, it was Thursday night. Watch Seinfeld, you tune in at this specific time. You don't get to choose your program. You couldn't be watching a program like Squid Games from Korea. Like Netflix was market expanding. In the same way, I think tokenization of real world assets will be market expanding.
And that's the big advantage, the 24/7 access?
That's one advantage, 24/7, global liquidity. A global market, right? Because who can really, do you think someone with a smartphone in Bangladesh could go participate in, oh, by the way, fractional ownership too. It enables if it's tokenized. You don't have to have, a full share of a stock. Like let's say you wanted to buy, what's a very expensive stock today? I don't know, imagine like Amazon or Microsoft. What if you just could put in the equivalent of $25 into it, which sounds small to us, but again, might be meaningful. If you have a smartphone, you can all of a sudden do that if it's tokenized. So we think that's kind of around the corner. But someone wise told me something, and I think it pertains here. Just because something's inevitable doesn't mean it's imminent. So I don't think that tokenization is going to be here tomorrow, and all of a sudden we're all going to be having, access to solar wind farms. From the Philippines now to in Kansas, but I do think it's in the coming few years.
Well, as you said at the beginning of this talk, it is early. I mean, it's so early that sometimes it astonishes me. I think something like only 4% of people still own cryptocurrencies.
Well, how many people? Well, maybe you don't want to tell now, if you do. But sometimes we say, how many people in the room? How many people in the room, by a show of hands, own or have exposure to crypto?
Oh, great. Wow.
Well, I guess we're in Silicon Valley, so...
This is not your normal audience. But I did want to let you go. I don't want to tie you up for too long. You've got to go off to something. Fortune announced, or reported in March, so when I saw you, you'd close $1.5 billion across 2 funds. Sounds like you're about to close $1 billion.
It's more than $1 million, but we've actually activated. What I can tell you is we've already activated Fund 2.
Okay. So you're investing from Fund 2.
We are. We haven't announced it yet,
and
I'm not allowed to. And I see my Chief Compliance Officer smiling
I know you're
at me in the office,
RIA.
in the back, because I'm not allowed under the RIA marketing rules.
Yes.
Gary Gensler.
Yes,
He didn't make them, actually. I'm joking. But
let's blame him for
but
everything.
There are RIA rules. We're not allowed to say certain things when. But we already have funds and Fund 2, and it's activated, and we've made investments out of it.
Okay, that's great.
Okay.
I also just wanted to give you a chance, if you want to take it. You're such a big brand. Paradigm is such a big brand. Andreessen Horowitz. How do you sort of, for people who may be, crypto founders in the audience looking for money, how do you sort of differentiate from Haun Ventures?
Well, I think you mentioned some great firms there in Andreessen Horowitz and Paradigm. So to even be mentioned in the same breath as them is great. And I think how we different, but we're very different. So how we differentiate ourselves. First of all, we're small in terms of a nimble team size. We're still only around a dozen people. And we call ourselves a nimble strike force. And I think we mean that in terms of we're all operators. We have all operated companies. We have all been in crypto. And we are the only fund, actually, I can say from any fund, including those you mentioned, that has a crypto founder on our team, and that is Diogo Monica, who was the co-founder of Anchorage Digital, one of the large asset custodians. And Diogo stepped away from managing that company after 8 years, and he's the chairman of the board. But about a year and a half ago now, time flies. A year ago in January, we recruited him as our first general partner. So he's now with us as a founder. And I think our founders really like having another founder. And it actually has worked out so well that we just hired another founder. And we'll be announcing that individual. He's joining us from another venture fund. He'll be joining us on our deal team on Monday. And we have to have another because we can't have 13 people. The team knows I hate that number, so we'll soon have 14 people. But I think that's one thing is we're all operators, and I think our founders know that. They come into our office and they're like, this is like a startup. We had to start up. We have to set up all our own stuff. I mean, Andreessen Horowitz is great, and it's a huge platform, and we're much smaller. But I think that's one thing that's differentiated. I think another thing, and I think other firms have this too, not only us, but I think we're a credible bridge to big tech, to enterprise, to financial institutions. I think we have credibility in the space to those, and our founders who want to play not just in the indie rock bands, but they want to play in the stadiums. They know that we can get them meetings. Of course, so can some of the other firms you mentioned. But we do have credibility in the space because we've been in the space for a long time. We don't make introductions lightly, and our founders know that. And then I think sometimes crypto, again, not the funds you mentioned, but crypto can be a little science project-y, a little science fairy, a lot of pie in the sky. And we don't like science projects. We like real businesses that have metrics, that have founders that show up that are building something with milestones and OKRs and traditional kind of companies. And I think that makes us a bit unique in the space. And founders self-select for that.
Well, I've just always thought, it's been fun watching your career. I thought it was great that you struck out on your own, and I, love watching the firm continue to flourish. So thank you so much for joining us.
Thank you
really
for having
appreciate
me.
it.
Thanks, everyone. Thank you.
Thank you.